Welcome to another edition of Econ Updates. I'm Steve Taddie, Chief Economist with Hoyle Cohen Wealth Management. Now, a watchword for the week could be moderation. Global growth is certainly not accelerating. And while the U.S. is an economic standout around the world, the forecast data that goes into the expectations of where economic activity will be are painting a gloomier picture than the actual data shows on a quarter-by-quarter basis. Now, while that's a head-scratcher, it's not terribly unusual in that forecasts are made up of opinions, and this subjectivity gives way to action when a business has to make a decision to invest or not invest. And it's that action that shows up in the real data. So maybe a better watchword for global growth might be begrudging growth or cautious optimism. But either way, global growth is moderating. Inflation. The big declines are behind us, as we had mentioned previously, but there will be skirmishes from economic region to economic region, and you can really see it play out in the central bank activity. For example, our own central bank, the Federal Reserve, has placed the Fed funds rate at a level where it is now above inflation by a good margin. Now, historically, that level or that spread has allowed the Fed to allow rates to plateau, meaning not have to rise rates in the future to contain inflation. In Europe, the European Central Union is certainly not in that same position, and they've been speaking a bit more hawkishly. Their inflation rate is a couple percentage points above the US, and their economic growth is about a third of the US in the most reported data. So they're a bit more hawkish than we are, but in other parts of the world, central banks have decreased their central bank lending rates. So the watchword in inflation is that inflation is moderating, and it looks like it's just a matter of time before we can stamp out the final embers of inflation. In our country, the jobs reports have been coming out month by month, and we are now in the 7th month of experiencing a negative revision to the jobs created data. And that's the big monthly number that we see on the headlines. And to put it in perspective, in a picture you can see, is the jobs machine was creating about 350,000 jobs a month in the average between January and March, that 3-month average. The 3-month average between June and August was about 150,000 jobs, or roughly a 50% decline from where the jobs creation machine was at the beginning of the year. Now, one could say that the Fed has certainly gotten their way in cooling what was a white-hot labor market here in the US. Now, going forward, we've got a fairly exciting week in front of us. We have our own inflation numbers coming out on September 13th. Then the next day, the European Union Central Bank meets and makes a decision on their interest rate regime. And then the following week, our central bank meets to make their decision on rates. So stay tuned. It could be interesting. And thanks for tuning in.